Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Sorry if my excitement and enthusiasm may sound insensitive to anyone who's hurting in the markets now, or who may be suffering through this recession, but this is not a mindfulness channel to help you deal with stress. This is a channel about Tesla and investing, because that's what I'm passionate about talking about each day. Anyway, we all know about this diabolical Q2, and we accepted it all and have moved on, and it would seem, judging from what a lot of you say, there appears to be a lot of excitement ahead for Q3. So I thought we could just dissect what Q3 has on offer and why it has people so excited, and it may take our minds off Q2 for a bit. Now, when we get Q3 delivery numbers, there's going to be a huge discrepancy. Fremont and Shanghai have ramped up a lot since Q1 and are at higher run rates now. Of course, Berlin and Texas would also start to contribute potentially noticeable numbers in Q3 too. This isn't meant to be my estimate, but if things go well, the deliveries should be somewhere around, Fremont could be up to 150,000, Shanghai is potentially already at 3,000 a day, it could be even higher in Q3, but there's going to be some downtime in July when they upgrade the lines. However, after that, well, the lines are upgraded and going to increase capacity by supposedly over 10%. Anyway, let's go with a slightly bullish 270,000 total units from China for Q3, because this is meant to be an exciting video. According to Elon, Berlin is already over 1,000 units a week now, or 142 a day. Assuming enough 2170 sales, then if they average around 250 a day in Q3, that's about 25,000 units for the quarter. Perhaps an additional 15,000 from Texas by then too. That gives us a total of 460,000 deliveries for Q3. Wow. Now that's a decent number. In fact, I just did a valuation in a recent video based on a 490,000 delivery, and it puts the current stock price at a PE ratio of 25 relative to the estimated earnings from that many deliveries. Wow. Perhaps my 490,000 for Q4 was majorly pessimistic, as my 460,000 for Q3 estimate is only mildly bullish. Perhaps for a more realistic Q3 number, we could peel it back to 450,000. Equally, Berlin and or Texas could have jumped at any time. These Q3 delivery estimates are actually a 50% jump from Q1 deliveries. That's a massive difference, and will be an even higher jump from whatever Q2 is. The media could produce headlines that read, Tesla more than double deliveries quarter over quarter, and it may be true. Now, in negotiation, one tactic is to totally lowball the other party. An offer is thrown out and the other party are usually insulted and almost certainly going to refuse the offer. But psychologically, you have just thrown out a figure and started the negotiation at a much lower price than the other party ever considered, but it has now made them reconsider the value. Just like we are going to see with the Q2 deliveries and financials, the stock price has seen these low figures and dealt with it psychologically, but the perception of the price has been skewed. And investors start thinking, what if Q2 is as good as Tesla can do, and will these issues continue and come back again? Then, when the contrast between the Q3 figures is seen, I expect to see a big jump in the stock price, assuming everything else equal. Q3 could make Tesla bounce back well, not to mention the split too, which could help as a catalyst, especially if it actually happens in the quarter, closer to delivery numbers. There's a chance we could see the stock price climb back close to as much as $1,000. Once the stock starts moving, then the short sellers have to cover their positions too. Hopefully Elon doesn't decide to buy another public corporation and start selling more stock either. With a bit of luck, Tesla's stock price could actually get a bit of breathing room and start to recover. Tesla's stock price has been beaten from all sides, oversold and conditioned somewhat with the other EV stocks crashing due to the fact they offer no value as a company. Whereas Tesla offers plenty of value as a company and will soon be seen as an entity on its own, no longer being compared in the same sentence with any companies like BYD. Tesla will be a juggernaut on its own. We know that's coming and we have that to look forward to. The market, however, is still unsure. If Q3 can really pull these sorts of numbers and Elon is right about volume production at the new factories in Q4, then Q4 could be well into the 500,000s for deliveries. This is certainly a possibility. With delivery numbers like that at the end of the year, or a 2 million a year run rate to start 2023, then assuming there is still an economy left intact, I would say that the stock price should return solid again, and there should be a real base of income to support the company from here on in, with diversified factories in different locations with multiple cathode types, several cell suppliers, plus in-house cell production, etc, etc, etc. I think Tesla will be good. And it's not even as if we're in the situation of, if we can survive this Q2, we can get through this Q2 easily, likely even making some profit still too. The only thing you might struggle to get through is holding on to your stock when it's lost so much money, and out of fear you sell because you're too worried you'll lose even more. If you have that mindset, then I'm afraid that means you probably aren't a great investor. Of course, if you need the money to live on by selling shares, it's different. So if we can just hold through these times, well, we'll come out better on the other side. And of course, if you're a pro investor, you're possibly buying up these dips as well. In fact, it would be good to get some rough idea of financials for Q3 so we can actually put Tesla into perspective of the actual run rate they're at now, which at the time of this video is likely the fastest their run rate has ever been. Q2 is going to be ugly. It might bruise the stock price a bit more, but at the same time, we have the shareholder meeting and the split to prop up the stock price. And remember, Tesla is down because it also got hit by shorts and Elon selling and the Twitter fiasco, which has also affected the stock price, but will clearly be temporary. So there's a chance there may not be another dip. Of course, I can't say the same for any potential macro issues. On the other hand, it would seem that most investors feel that the Fed will likely pivot somewhat. But I guess the question isn't really whether they will, but more when they will. If they do though, there's a good chance it will be before the elections. Alright, so assuming all goes well for Q3, we're dealing with record deliveries and profits. Judging by one of my previous financial forecasts I did for Q4, I think this would be between $6 and $6.5 billion in earnings, annualized around $25 billion. With a $673 billion valuation at the time of this video, then that is 27 times as much as the annualized earnings. That's rough, but hopefully I'll do a full financial model to get a closer estimate of in time. Now, earlier this year, pre-war and inflation, I made my 2022 price target. It was $1,500. This was my price target for when Q4 financials are released. I'm not sure it will be quite that high now, but the potential Q4 has. It might not end up being far off still, particularly if the war is over. Of course, FSD or something could always make the price jump at any time too. Look, personally, I think Tesla, with a valuation that has a PE ratio this low now, when they're not even doing 500,000 cars a quarter, makes the company seem undervalued. That is only 1/5 the number of cars that Tesla aimed to be selling at the end of the decade. And remember, with economies of scale, 5 times more cars means more than 5 times more profit. Yeah, and that whole potential FSD thing too, which could add another zero onto the stock price. I think the stock price is very much hanging around this whole Q2 sentiment and vibe. I'm still not sure if there is much more it can do to hurt the stock price, even if delivery numbers are worse than expected. It's such an arbitrary delivery number that is so irrelevant, as it's all about what Tesla is capable of now, when governments aren't forcing them to shut down. Either way, as bad as Q2 has sunken the stock price, it should just make Q3 look that much better. And that's now. These new factories are ramping. We have an additional one coming in China and another one in Indonesia. Maybe another one in Canada coming too. You know why? Because Teslas, well, they're very popular and everyone wants one. Just as an auto company alone, these new facilities will generate substantial profits. And then just think how much these vehicles may increase in popularity again when they can also drive you around. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.